Hi, friends. Professor Joe here. I hope you all are doing great and welcome to this video. In this video, we are going to discuss about your investments. What would happen to your investments depending upon the election outcome? Yes. So, we will discuss some very important points related to the election outcome and your investments. And friends, if you have still not subscribed to my channel, kindly subscribe to my channel and ring the bell icon. I keep creating a lot of videos related to finance, economy, stock markets. And these videos will surely help you to update your knowledge in the financial markets. Let us get back to the topic of the day. Now, friends, there are two types of investors. One, those who have directly invested into the stock market. And second type of investors are those investors who have invested into the stock markets, but through mutual funds. Now, for people who have invested directly into the stock markets, do they have to worry about the election result? Yes, they have to worry. But which kind of investors have to worry? Now, remember, whichever party comes into power, if you have invested the right way, you don't have to worry. When I say right way, what does right way mean? You have invested in the best companies, like companies which are there in Nifty 50. You have invested in those companies whose product is visible. There is a demand for the product. The management is good. The company has been making great profits. And whenever you got a good opportunity, say like value investing, like whenever you saw that the share price is low than its normal price, or because of some small problems, the price has fallen down, you purchase those shares. That is basically you did value investing. Then in that case, you don't have to worry. But for people who have invested directly into the stock market, but purely basis tips, that means somebody told you that the stock price is rallying, the price is going up, and you entered into that stock. You probably might have entered into a mid cap or a small cap stock. Of course, the price might be higher than where you have purchased it. But companies which are making profit only because of one or two contracts, they do not have a stable growth rate. They have not been growing steadily. Just because they got one contract, the prices have gone up. You don't see them in the B2C market. That means you don't see consumers using those products. Or in the B2B market, that is business to business, you are not able to identify that the product of this particular company, which type of companies are using. Say, for example, if the automobile industry is growing and there is a company that is selling products only to the automobile company, say like tires, then if the automobile industry is growing, then the tire companies will also grow. But if you're investing in a company which do not have a good B2B business or which do not have a B2C business model, but they just grew because they got some contract here and there, then you have to be very careful in such cases. Because when there is election result, these kind of companies might fall. So if you're invested looking at proper fundamentals, then you don't have to worry. But if you're invested just looking at the price, then you have to be cautious. The next type of investors who have invested into the markets through mutual funds, systematic investment plans. For them, I would say you should not worry because your investments has been invested by professionals. They know how the market operate. Yes, if the price falls, if the entire market falls, you might see a dip in your NAV. But if the entire market goes up, you will enjoy the profits in your NAV. So for those people, you do not have to worry. You just have to be focused, focus on your financial goals, and till your financial goals are not achieved, do not pull out your investments from these funds. Now, friends, let us have a look at the chart and try to analyze what has happened in the past few elections. And let us see how the prices have impacted. I am talking about major impact, no minor impacts. Okay. So let us have a look at the chart. Friends, like you can see, this is the Nifty 50 chart. This is a monthly candlestick. Okay. It's a monthly candlestick. So one candle represents 1 month. So we will try to see when there were dips and did really elections make that kind of impact. So if you see, you can see the markets here from 1990. Okay, and the first dip was in 1991. Now, why that dip was in 1991? Because of LPG. Liberalization, privatization, and globalization. Indian economy was in a bad condition at that time. It was the Narasimha Rao and Manmohan Singh government who brought some new changes in the economy to make sure that they protect our economy. And that is where the stock market fell down initially, and then you can see that the prices went up after that is when the people got the confidence that the decision taken by the government was really, really good. And then you can see that the prices went up. In 1992, there was a Harshad Mehta scam, and then the markets fell down because people started losing trust in the market. And then you can see that again the prices went up after 1993 because SEBI was formed, SEBI put the confidence into the people, and then things started moving back up. Then in 94, there was a small dip, and then the price kept going up and down, up and down, up and down. Then there was a major dip in 2000, year 2000. Why? Because of the dot com bubble. But if you see, there were ups and downs, there were two elections between that. But the prices went up, came back a little bit down. The prices went up, came back a little bit down. But the major dip was not because of an election. The major dip was because of economic crisis. So, like in 1991, there was an economic crisis. In 1992, there was an economic crisis. And in the year 2000, there was an economic crisis. Now, it took the market time to come out. Okay. And then in 2003, you see the prices again started going up. In 2003, there was no election. In 2004, there was election. But in 2008, because of the subprime crisis. So you will see all the major dips are because of economic crisis, financial crisis, global crisis, not because of elections. The prices came down and again then the prices started catching up and going up. In 2015, there was a small dip. Then the major dip happened in 2020 because of COVID. Again, there was global crisis. And then you see again the prices have kept going up. So if you see from 1990 to 2024, the prices has constantly kept growing up. So the people who have been invested in the stock markets for multiple number of years, they have made money. So if you believe in the Indian economy, if you believe in the youth of our country, then you need not worry. Yes, depending upon the election results, there might be small dips here and there. As I said, if there is a dip, consider it as an opportunity to enter into the market. And if the market spikes up, enjoy the profits. So I hope that this little analysis which I've given about the election result need not worry you, because the election results are not the major reasons why the stock markets fall. It is economic crisis, global crisis, financial crisis, which are very, very large in nature. Those are the things that impacts the market. Small ups and downs are part of the market, so don't worry about those small up and down. Be invested in the markets and be positive about the markets. Now, friends, looking at the chart, I hope you must have understood if you have invested the right way, you need not worry. If you believe that India is a young country and a good leader, a leader with vision, a stable government comes, our country is going to grow because India has a lot of potential to grow. So if you believe in India, you need not worry. There can be some small dips here and there, but that does not change the direction of the market. It might take a small dip. See, corrections is a part of market cycles. So if there is a correction, don't look at it as a depression in the economy. Look at it as an opportunity where you can enter the markets once again with a good price. One very important thing which I want to tell you is inflation is something that you will have to fight. And if you invest your money into FD, that is a bank fixed deposit, you will never be able to beat the inflation rate. The only way you can beat inflation rate is by investing in the stock markets, but investing it the right way. You need to understand the fundamentals of the company before you invest your money. And if you're not able to understand those things, you do not have time to invest to learn these things, then the best option is get with mutual funds. Invest your money through good mutual funds. Look at their track record. Look at the fund manager track record and then invest. Friends, if you want to make money in the markets, you need to spend time in the markets. You need to be in the markets. Quick way of making money can get dangerous. So you need to spend time in the market, invest the right way, and in long term, you will surely make good profits from the markets. Friends, I've written a book, Traders You Can Win But First Learn to Lose. This book talks more about technical analysis and trading, and of course, my experience in the financial markets. If you're interested, it's available in Amazon and Kindle. And friends, if you love the way I'm creating content, please like and share these videos. So, like you, there might be many others who want to learn trading and investing the right way. These videos will surely help them. Friends, I've created a lot of videos and in coming times I'll be creating many more videos. So if you're still not subscribed to my channel, please subscribe to my channel and ring the bell icon. I've created a series of training videos, especially for technical traders. The link is given below. Friends, all I can say is keep learning, keep growing. Thank you. Namaskar.